Hello everyone, this is Pattu from FreeFinCal, and in this video let's talk about momentum stock investing, or as it is known simply as momentum investing, and let's find out if such a strategy will work in India. So what is momentum investing? Momentum investing essentially means that you look at a stock that has performed well over the past 6 months to 12 months, and if it has given good returns over the past 6 to 12 months, that is, its price has been moving up, then you invest in it and you hope that the momentum will continue, the upward movement will continue, and as long as it has this upward movement, you you stay invested in it. That's called momentum investing. So you look for stocks that has been rising in the past, and you invest in it in the hope that it will continue to rise after you buy it, and you hold the stock and you keep buying the stock as long as it keeps rising up. Why is it against logic? Well, the reason is that there's something called hot hand fallacy in finance, in behavioral finance. Hot hand means that a person who keeps on, for example, a sports person who keeps on, scoring points or hitting centuries, or let's say there's a T20 World Cup and a batsman keeps hitting minimum 50 runs in every match. What is the guarantee that he will do that in the semi-final or final, right? That's called the hot hand. So the hot hand means doing well, having a fantastic performance, but it can fail at any time, right? That the same person who has had a fantastic record in the league matches can be out for a duck in the semi-final and final, right? So that's called the hot hand fallacy. So that's why people do not like momentum investing. There's a criticism about momentum investing that it's based on past performance, but it does work. The studies have shown that if you look at stock returns over for periods less than 6 months, then it does not convert into returns for the next 6 months or in the future. And if you look for stock returns over the past more than 1 year, it does not convert well into future. But 6 to 12 months is a nice sweet spot. So stocks that have been moving up in the past 6 to 12 months, they continue to move up at least for some time, and you can buy them and profit from them as long as they keep moving up. So that's called momentum investing, and that's why it's against logic. There is another type of investing called low volatility investing. This is in a way related to momentum investing. So here what you do is you look for stocks that have low price fluctuations, daily price fluctuations that are low. So the volatility is low and you keep invested in them. So you stay invested as long as the volatility is low. Again, this is against logic, because if you look at the standard market mathematics that people use, there is a logic that if you want to take returns, get higher returns, you need to take higher risk. In this case, you take lower risk and you actually are able to get higher returns. I have a detailed video on index investing options in India. I will link it in the description box. You can see that, and there I have shown how low volatility investing actually is able to produce better returns at lower risk. So that's why this is also against logic. Now, so these are the momentum and low volatility indices in India. So we have a BSE large mid cap index. This is from Standard & Poor's, S&P and BSE. So this is a 200 stock index, about 200 stock index, which has got large caps and mid caps in it. And 30 stocks from the large mid cap index is taken, and these 30 stocks have the highest momentum. That is, in the last 1 year, their prices moved up the highest. So that is put together, and the BSE momentum index is created. So the stock with the highest momentum or the highest gain in the past 1 year is given the higher weightage. Then there's a BSE low volatility index that is created from 30 stocks from the BSE large mid cap. Again, these are stocks with low daily price fluctuations. Now, if you look at the overlap between the BSE momentum and the BSE low volatility, there's almost like 50%, 60% overlap. At least if you look at the current portfolio, the current portfolio is linked in the description box. You can see the link. Now, before we look at the analysis, I just wanted to tell you the connection between momentum and low volatility. So for that, let's just look at a simple picture here. So let's say that this is the price moment, and this is on the y-axis is time. I'm sorry, I'm drawing a crude picture. So so let's say there's one stock that's kind of, you start investing here and it's kind of goes up like that and it keeps going up. You can see that this is a stock that has got momentum, so it's moved up, right? And you can see the volatility is also not too much. Now compare that with another stock. You start investing at the same time, and this is much more volatile and keeps going. But it has kind of come to the same, more or less the same price as the other stock. So if you look at the black line stock, the black stock, it has momentum with low volatility. The red stock has got momentum with poor volatility. So the idea is to choose stocks which have got good momentum with low volatility, and that is how the BSE momentum index is constructed. It chooses momentum stocks with low volatility. I will be publishing a list hopefully from this month, and I hope to publish it tomorrow. This will have a list of all stocks with high momentum and low volatility, so you can mix and match and play around with it any way you want. So now you have the comparison of the S&P BSE Sensex, that's the pink line, the S&P large and mid cap, that's the green line, and that's compared. So those are the bottom two curves, and they're compared with the S&P low volatility, that's the white line, and the yellow line is the momentum index, BSE momentum index. You can see that the low momentum index and the low volatility index kind of pulls away from the other two, and you can actually see that the low volatility index actually does not fluctuate as much as the momentum, and it's more or less performing similarly as the momentum index. We'll keep that in mind as we look at other results. So what we are going to do now is to compare the BSE momentum index with the BSE large mid cap, and we are going to look at every possible 7-year periods in the past, over the past 10 years or so. So there are about 748 7-year periods. That's called a rolling return graph. That's the one that you see on the top. Excuse me. So you can see that the red curve has got here has got 748 data points. The blue curve has got 748 data points, and you can see that the momentum index significantly outperforms the large mid cap index. And at the bottom you see the rolling risk or the rolling volatility graph. See, there's not much difference between the volatility. So if you see that if you invest in the momentum index, you actually get the same kind of volatility as the BSE large mid cap, and you get much bigger, much higher returns, right? And that's very interesting. Now let's look at the BSE momentum index versus BSE Sensex. Again, the BSE momentum, again for 7 years. So the momentum index has significantly outperformed the Sensex, and notice that the risk is similar, practically identical. That is very strange, right? You are actually taking on, you're selecting a smaller bunch of stocks from the BSE large mid cap, and you are able to get higher returns at the same risk, and this is quite amusing. Now, if you compare the BSE momentum index versus the BSE low volatility index, here you notice that the momentum index does not always beat the low volatility index over 7 years, and if you look at the risk, the momentum index always has got higher risk than the low volatility index. So that is why I feel that the low volatility index is a little better, because you get guaranteed lower risk and you get comparable returns, and that's fantastic, right? You get low, you mind, this is an investing strategy with low risk and high returns, and that's fantastic. So that's why it's against logic or counterintuitive, as I said. So these are the current constituents, a snapshot of the current constituents. The full list is in the link, and you can see that there are many stocks which are overlapping. That is, many stocks in the BSE low volatility index are present in the momentum index as well. So in summary, momentum investing works, low volatility investing works. Low volatility investing is a little bit better because you are guaranteed of lower risk. And if you look at the link below, I will show that it does not work so well in the US market, at least if you look at the S&P 500, but it does work in India for sure. And from now on, I would like to regularly produce lists of stocks with high momentum and low volatility. So follow freefincal.com for such updates, and you, also don't forget to subscribe to this channel and click on the bell for notification alert. So I'll catch you in another video. Bye bye.